What's up, fam? So, got a lot to go over. I'm gonna get through this one really quick. Uh, I don't have any questions left over like my last video where I was a little unsure where I was gonna place the Elliott waves going through here. I've got that worked out. I'm gonna show those to you. I'm gonna show you multiple reasons why I feel like we really are still at the bottom. Even though we closed lower today than I've been wanting to see, I think that was more of a blessing in disguise than anything. First thing, these levels here are matching up very well to this previous downtrend, right? Pulling, so this spike here matches up with this spike, right? This lower portion really lines up with the bottom of this. Like with this, I don't even know what happened there. That was just one big long wick, nasty looking candle. But we're still like we still are at that bottom. Let me hide that back so you can see a little better. So we still had our same bottom there. We still had our same top there. Coming down through here, these support resistance levels, the appearance, everything is looking the same. But I'm gonna argue why, even still, after closing today lower and after the extra time than was anticipated, so on and so forth, these levels just won't be seen. Pulling a Fibonacci from here to this low, there was no news expected here. There was no news released here, right? So why we had this, Fibonacci tells me why, but nothing else tells me why. And Fibonacci is great, and it will kind of tell you the picture, but you kind of need something to push it to happen, right? So I would never expect news to come out here to cause it to go up, but as it's on its way up, if news is to be expected, then that's when I expect news to be released. And that wasn't really the case on here. The only thing that made this chart want to go up is Fibonacci itself. There was no fundamental reasons whatsoever. I think that was part of the reason why this was broke, outside of the fact that, before this, right? So beginning of September sometime, there was a 8K released, and then right up in here somewhere, I think it was right up in here, there was another 8K release, and this one wasn't bullish, to say the least. So it was very, very long. I looked at it right before I started this video, and I think it was like 121 pages, and I just decided I wasn't going to go through all that and give the answer of what that AK specified and stuff. So y'all can do that yourselves. I believe the date was October 9th, that it was released, which went ahead and nullified this uptrend. But Fibonacci itself tells us at that point that so this swing here, we got down to this golden ratio of 1.618, and people bought in on that, right? That's just kind of, and you could have made a good profit, buying in 1.1 cents and sell, if you sold it at the top at 2.5 cents. That's, you over doubled your money. And there was people that got trapped in here too as well, but that's just kind of part of the game. There was a lot going on in this time, and most of us was here during this time, and completely understand what was taking place with restructuring. New information being released of tax filings, and that wasn't ever filed, and all that kind of stuff. I'm not getting into all the fundamentals, so I'll go to sleep on you. So this is the only answer I can find to why this rally happened, and it kind of was somewhat of a relief rally too, which really kind of take place quite often. So why is this one different? Well, for one, we are actually expecting news here. There was no news expected, and this was just a random event. We are actually expecting news here, so that's my number one. We're pulling a Fibonacci from on this structure over here. All of ours is, it's all from the same levels. I could still use this same Fibonacci from over here essentially, but because we didn't close a daily candle above this 382, and that's kind of the level of, that's kind of the target that I'm going to be looking at when we have our uptrend. Like, are we going to have a daily close above 0.0236? If we start really fighting that, it's gonna make me, it might make me a little skeptical, and it may represent that we're gonna finish out. Cause I mean, everything else is damn near identical, so we can't close above this level when we have our rally. Then there's a good chance that we'll just go ahead and finish playing out this whole event right here. I don't think that's the case. I have a lot of confidence in the company. We've already tried uplisting once. We know what they're kind of asking. We know our pitfalls from last time, why we got denied, and I think they're going to have all that cleaned up. So I'm only expecting good news. This is going to be kind of the area of significance once the next rally starts. Okay, this doesn't touch the bottom, right, of my chart here, of my candles, and that's because I finally figured out these Elliott waves, and they were really kind of kicking my butt. I had number one, wave one. I had it over here. I had wave two sitting down on there, and multiple things that I kind of had wrong with it. Unfortunately, I hate that I even presented it to you in the wrong way. But I'm trying to rebuttal from that, and I've figured out the structure. And I think I figured out the answer of this whole thing. So wave one, like I had mentioned in my last video, me personally, yeah, sure, you can target that level, and you might hit it, you might not. But me personally, I just let wave one play out. Once wave one plays out, then I start targeting my next levels. So we let wave one play out here, and I'm just going to kind of show you this just to kind of show you why I think that wave five, like I just was showing you, I've kind of got wave five sitting right here, 0.0126. I feel like that's going to be the bottom, and I'm just going to show you that all Fibonacci's line up the way I have these waves. There is no questions left in the balance. So wave one plays out. So I've got these Fibonacci's set up, each one of them, where they only represent the particular extensions or retracements that coincide with the rules of Elliott waves. Okay, so when I draw them on there, if the candles don't hit at one of these price levels, then the rules broke, and either I didn't find my wave correctly. Look, I didn't even move that one back. So either I didn't find my wave correctly, or I cannot use Elliott waves anymore because the rules have been broke. You can see clearly this one bounced right up to 0.764 perfectly, and so there's your wave two. Wave three is it can land anywhere between 1.618 and 2. Well, so I mean, there's your different price levels. Wave three can hit either one of these three levels, and you see right here where it kind of nailed it, pretty much pin drop right on that 2.0 extension. I kept going back and forth why. I mean, it just really makes sense like that should be wave 3, but that can't be because wave 3 has to be the longest wave. Putting it here, it doesn't allow it to be the longest wave. And I'll show you. So this trend line here, 62.5% retracement over 120 bars. Now those bars are 2-hour candles. So 240 trading hours to drop 62.5%. And then that was over a distance of 263 pixels. The more I zoom in or zoom out, that pixel number changes. So as long as I keep it in one place, I can kind of just analyze that. So at this current scale, 272 pixels for that trend to play out. And then on wave 3, now we've got, see, I got to move it again. So 277, 348. So that one's longer. If I just had it on this candle here, then it's not quite enough for it to be the longest wave. Wave 3 has to be the longest wave. So 261 as opposed to 277. And it hits this 2.0 extension perfectly. So that's how I can be confident that wave 3 is where I just showed it. I'm going to turn those back on. All right, so wave 4. Wave 4 is the retracement of either one of these 4 levels of wave 3. It hit right there, 0.146. It was a shallow retracement, but it still hit that level. And that's how you know for sure, like, this is your wave 4. Now, where I really messed up big time last week, and where I lost a lot of time from being able to post any new videos like part 1 and part 3 of me analyzing the chart, which part 2 should be redone kind of more so with this video than the last one, because I was wrong in a lot of that on the last one. And Elliott waves are difficult, and I admit that. And there's going to be even simpler things that I'm just going to overlook sometimes. Like, I don't really have a lot of time to do this. So when I'm doing it, I have to kind of, in a way, rush through it in order to get something to y'all. But I want to do it. I enjoy doing it. And I do the best I can with it. But I spent countless hours last week trying to analyze what I kept considering the C wave of this ABC correction. And that was all a complete waste, because we are actually still in wave 5 of this motive wave, right? So of this downtrend, we're still in wave 5. And I know that because all these levels lined up perfectly with Fibonacci, but I also know that because the volume profile. All right, so wave 5, it can be, like I said in the last video, it can be targeted 3 different ways. It can be anywhere between 1.236 and 1.618. It hit. Okay, it could be an equivalent of wave 1, or it can be an inverse of waves, inverse of certain Fibonacci levels of waves 1 through 3, and I'll go ahead and say that one's completely ruled out. It could still kind of be a match of wave 1, and if we don't get the news that we're looking for, there's a lower level that could potentially come. I'll just kind of get more into that if we do get that negative news, but that's a big if, and I don't think that that's going to be the case, and I think I can just go ahead and not account for having to do that video. Thank gosh. So yeah, I really thought that this was the C wave. It's actually the 5th wave, and it hits right in here. But so it can land anywhere in between these two for the 5th wave. But all these other ones have hit. Wave 4 was a little bit of an exception. It wasn't a pin drop on that Fibonacci level, but these other ones were, and I expect this one to be. With us closing below that level today, that I've been stating that we really want to stay above. That'll go ahead and probably drive us to pin dropping this level here. When I was analyzing it as a C leg, this was a price level that I referenced. So we could get out of there, kind of where we was. I think 0135 or so. When I was anyway, so somewhere right in here, or it could extend down to here. Well, that was kind of lucky because we're not in that C wave, we're in the fifth wave, and this price level still kind of showed its face. So, that's where we'll bounce out of. I mean, that's my answer. Sure, 0.033 was the answer, and then 2.5 cents was the answer, and but you see the significance in the areas that I had called before. Luckily, I was able to kind of catch these other moves a little bit before they happened. I kept talking about the rounding effect. We wanted to see this kind of round off and squat, and then it started rounding off, and it sure as hell squatted. It pretty much just came and sat down. But here we are. We fought through it. At least the majority of us did, and congratulations for doing that. This will be our last little leg here, and will also allow for us to actually hit that V bottom. Coming down and targeting this, but this needs to be kind of a quick move. If it's prolonged and it just keeps dragging and going in that same trend that is going, there's really not much of a V bottom opportunity. It doesn't have to have a V bottom, but if it doesn't have a V bottom, all right. So let me zoom out some. If it doesn't have a V bottom, you're kind of looking at going. You're kind of looking at coming out of here. Obviously, there's waves, but kind of slow and steady in a way. You have your V bottom though. You're gonna get out of here fucking quick. It's gonna be a lot quicker move. We can have that V bottom. So that's obviously what we want. We want. I do this every single time I use that. Every single time. We want that quick move down. Go ahead and test this. Get it out of the way, and let's start making some money again. Oh, I've been referencing this descending channel quite a bit. I'm gonna go ahead and leave this fifth wave on here so you can kind of see how these things line up. I've been referencing this fifth wave. Look at me. This descending channel quite a bit. And so this is it, and we're testing that upper boundary of it, and we're still, and for the majority of the time, we're staying in that upper half of it, which really represents that a trend reversal is on its way. It doesn't represent when exactly, but if we were staying in the bottom half of it, then there's the higher chance of a break to the downside. But because we're staying in the top half of it, the majority of it, that ups the chances of it being a breakout to the upside. Now this is a little bit different of a channel than I showed on the daily thread, but it's just slightly modified, and I think it just kind of suits the trends just a little bit better. So this is the one I'm kind of going with right now, and there's a couple different. I mean, obviously I could pull this up and kind of hit these other levels, and it's kind of hard with the magnet. But I like how this is drawn. No candles close above it or below it. I mean, with this one closed below it, but it spiked right back up, which also kind of explains why we had that big bounce like we did, right? So this is before I'd kind of noticed the channel, and there really wasn't too much that had played out at that point. So we broke below that channel, and then immediately we got right back into it. I want to introduce you Fibonacci, well, time-based Fibonacci, right? So it's the exact same sequence of numbers and everything as we use to target our prices, but we can use it to target dates as well. Now, I have never been successful pulling it before. That's why I've never referenced it before, and that's why I also held on to this one for 2 or 3 weeks after I placed it in there, right? Because it's trend based, and you've got to, that comes off of 3 different points. You got to pick a low, a high, and then another low again. And which ones do you pick? I mean, there's obviously multiple waves that take place in here, so trying to find one, uh, the correct one to pull it from, it is kind of tricky. And a lot of times a couple of the Fibonacci levels will line up, but then there's others that just ain't even close. So then I pulled this one a couple weeks ago, and it was really surprising how many of these moves were dead on with time-based Fibonacci. Let me just go ahead and show it to you. All right, so I pulled my trend from here, and then I think it was like maybe back down to here. I can't remember where. Anyways, doesn't matter. I've got it on here and represented to you. I didn't just place these in here as from an actual tool, trend-based Fibonacci time. So you see how you'd have to pull 3 different levels. So I did that. The 0.618, and I took a lot of these off of here, a lot of the Fibonacci levels off of here, and I just showed the most significant ones, the golden ratios, and things like that. But you see the 0.618, and the price movement associated with it. You see the 1.0 and the price move associated with it, 1.618. The 2 didn't really, but 2's not even a Fibonacci level, right? It's just nice to kind of reference, so this is 100%, this is 200%, this is 300%, this is 400%. That's the only reason I even have that in there, but it did kind of round off right before this and have a continuation, so maybe there is some significance in that one. But so the 2.618, big price jump. The 3.0, sharp, I mean, it was a round off, but it was like a sharp round off, right? And a lot of price movement there. You get to the 3.618, exact same thing, a lot of price movement. And obviously, right, so that shows as the Fibonacci level itself shows as May 5th, but it was May 6th that it happened. This one shows as April 9th, and it was more like the 12th that it happened. So it's really accurate. Some of these were dead on it. Some of these was within a day, 2 max. You get to the 4, and we broke out of that channel, coincidental or not. Then you get to the 4.236, full Fibonacci extension, landing end of day, June 1st. June 1st is on a Tuesday? Pretty sure it's on a Tuesday. TLSS likes their Tuesdays, right? Maybe some afternoons news release, or maybe Wednesday morning news release. I mean, it could even be Thursday, but should be significant price movement at that point. Okay, well, that doesn't line up with this channel any, right? It could be that we extend this out, and so if we was to do that, if we was to kind of follow this current trend that we're kind of in right now, you're still at that June 1st date. I mean, it could, you see, it's really accurate, but it could be before, it could be after. I'm not holding too much to that time-based Fibonacci, but at the same time, it's pretty coincidental that all this stuff lines up, and then the big news release that we've really been waiting for really close to a year now is finally being able to be uplisted. And now all of a sudden the full Fibonacci extension, 4.236, lines up at the time that we're expecting this news drop. Come on, get with me, fam. Like, that is it. And this is our last week of pain. Like, Obviously not financial advice, but this is our last week of pain. It is so close to being over now. We get, we could get some bad news, I guess, and it didn't get pushed through. We got denied, whatever it is, and that be our big move. There's going to be price movement. I expect there to be huge price movement. 1.618, the golden ratio, right? It established this entire downtrend we had. Now we get to the full Fibonacci extension after a 5-wave structure, after a channel breakout. Hold on, bear with me here. I don't know why that got like that. Let's see. I don't even know how to fix it now. Let me get this one off of here. I noticed that earlier. Let's see. Well, why do we need this jolt down, right? Well, I'll tell you. The daily, and this is what matters. We're extremely oversold. Now, look back in the entire history of the chart, like right here on my screen right now. We never broke below the 30. We have stayed inside this band. We broke over it, but we have stayed inside this range for the entire history of the TLSS chart. Well, where are we at now? We are below it for the first time ever. We broke below that level. So we should just go from here, right? Well, you look down, you look at the 1 hour chart, and then it's not so ugly anymore, right? We're right there about midway. Obviously shows oversold, but we're not too oversold. That's why it's got to be a quick move in order for it to be a V bottom. We're looking at an hourly time frame that the RSI can kind of create. See, it's broke through these levels on the RSI on the 1 hour time frame, and we're kind of sitting up fairly okay-ish on the 1 hour. So we get the quick move to go ahead and push the RSI down to extreme oversold territory. We get our V bottom, we get our uplisting news at the full time-based Fibonacci extension upon channel breakout at the end of the 5th wave of the Elliott wave. Are you kidding me? How could you argue that? All right. So let me go ahead and let me move past that. I'm gonna go ahead and just. I think you already know. This is the level right here that I keep referencing, that we have to have a daily close above 0.0425, right? We get that daily close above it, and we know for a fact that, and that's obviously, so that's a 4x from there. From here to this point, that's only a 2x. But it's significant because if we want to see these levels or more, we have to close below that. We don't want to just be stuck at 4 cents. That's the daily close. We close a daily above that with the amount of shares that we have in all of that. Then we're going to hit my 11.5 cents and potentially, but probably, go ahead and close this gap up here. I expect, maybe potential acquisitions and things like that. It should be an easy 17 cents. But why would we come up here, make it all the way up to 17 cents and not close this gap? You can see the gap better on the daily chart. Why would we come all the way up here to 17 cents and not close that gap? Well, we wouldn't. If we're going to make it up to 17 cents, we're going to make it up to this 20 cent mark. Or at least 19. very, very possible, and the first but last step to doing that is daily candle close above this mark. I mean, the last time we had a daily candle close above 0.0425 was the 2nd of March. That was a long, long time ago, right? But that level also held, I mean, with one, and I don't know, I get we could probably close. Yeah, no, we closed below it with this one exception right here. But that level held March 2nd and January 11th. So 2 months there. We're over 2 months being below it. It's pretty significant. Another thing is a double bottom, right? Sure, this was a double bottom, but like I said, we wasn't expecting anything. How do you know that it's a double bottom? Well, for one, your first trough, I think they call it. Let me hide this volume. So your first wave of this double bottom, right? So from the low to the high should be around 20%. Okay, let's just go ahead and see what it is. From the low to the high, man, look at that, 23%. Okay, so chances are, so far, double bottom. All right, looking good. The other rule, you cannot break 3%. So this low and your first low and your second low has to be within 3% of each other. So from this low to where I expect the fifth wave, 0.0126, where does that take us? 2.95%. That is a MFing double bottom on top of a significant resistance that held us down for an entire month, right? I mean, at least 3 weeks. Maybe, I mean, an entire month we was stuck below that, right? Once we broke through that, all hell broke loose, and we got 850%. We just double tap back tested it perfectly at the end of the fifth wave, at the end of the full Fibonacci time-based extension, completely oversold, channel breakout, uplisting news. You don't get that from an 8K, right? You only get that from technicals. I'm sorry. Just to go over real quick, once we bounce off of this level and start our correction, the correction should go the opposite way, right? Because we're not continuing, we're correcting. So I kind of, an ABC correction is typically 61.8% of your previous trend. All right, here's our previous trend. Our 5 waves would be our previous trend. 61.8%. So that would be the 0.618 Fibonacci retracement level, okay? Should be the total ABC correction. So you're going to have an A, you know, it's going to correct for B, and then you'll have a continuation for C. 61.8%, all right? Just keep that in mind. Let me turn this on. Wow, 0.0425. It's typically about 61.8% for your ABC correction. Come on now. Come on now. All right. So this is kind of just how all right, so ABC corrections, your A wave's going to have 5 waves within it. Your B wave's going to have 3 waves within it. your C wave is going to have 5 waves within it, okay? So for our A wave, you got 1, 2, 3, 4, 5. And these are just kind of rough, right? But I'm just going to show you an example of how just the ABC correction itself, not 5 waves to come afterwards, because what would we correct for if we wasn't going to move forward? There would be no need to correct. Correct? All right, so 1, 2, 3, 4, 5 for your wave A. Then you have a 3-wave correction for wave B, A, B, C. Then you have another 5-wave structure for wave C, and which would take us out to this level. And like I said, I just kind of roughed this in just to kind of give you an idea of what we'd be looking at for the overall ABC correction, which I have shown here. So A, B, C correction. To get us up to this 0.0425, hopefully have a daily close above it, right? And we do that, and I'm telling you, that's when we'll get one. Oh man, look at that. That's when we'll get our 1, 2, 3, 4, 5 to close the gap. Come on now. Reverse split at that point after the gaps close, just like charts are supposed to be, because charts tell the story, the company is the pawn, and this is how it's going to go down. I'm so glad I was able to get this answer. Obviously not financial advice. I could definitely be wrong and so on and so forth. But I think I proved my case. I'm so thankful to get this answer. Clears up a lot of things for me as well as y'all. So let's get fucking bullish. Pardon my language. Hopefully there's no kids around. Let's accumulate as much as we can accumulate. Let's enjoy this massive ride that we're fixing to get, right? That macro trend, those macro trend lines that I had referenced, and when you pull the trend lines, you break out of the trend, and I don't even know the words to use, but so if your trend lines start here and in here, that distance there you would add to your breakout. Let me just go ahead and show you. I think I even have them in here. That's not the right one. That's your macro trend lines. That's where I kind of drew them from, so where they kind of bounce off of. We have a magnet off. We'll just get close. 2,630% move right there altogether. So if we put that 2,630% at the breakout of the trend line, say 2,600. Whatever, that's close enough. That takes us to 43 cents. And that's the argument we keep having, is that realistic? Is it not realistic? And maybe it is, and maybe it ain't. But one thing I'll tell you for sure, closing this gap right here is absolutely realistic, and that's absolutely what we're going to do. Thank you, fam, for watching. If you could hit the like button for me and subscribe, help out this algorithm a little bit to where my videos reach more people. They show up first on YouTube and so on and so forth, and it kind of help spread the word that way. Obviously not financial advice and that whole rigmarole that I've pretty much just stopped doing, but I think it's pretty clear. And I'll catch y'all back on the sub then. Thank y'all.